So I thought I'd go into triple entry accounting in a bit more detail by drawing a comparison between how Bitcoin transactions work and how triple entry accounting could work for corporations. So in Bitcoin, things kick off with the creation of a number of Bitcoins through the block reward, and the equivalent in business is when some labor is conducted or a product is manufactured, and now you have an asset on the books. So that's the creation of the asset. And then you have transactions in the Bitcoin blockchain. So the created Bitcoins get transferred from address to address, wallet to wallet. So we can compare a company with a Bitcoin wallet, and then you have your standard double entry accounting within the wallet. The balance of the wallet is the number of credits minus the number of debits. Now it doesn't quite compare because of course in double entry bookkeeping everything has to balance to zero. But you can take a Bitcoin wallet and do double entry bookkeeping on it if you like, and then your credits and debits should total to zero, and your inputs and outputs are tracked in those credit and debit account ledgers. And again, in companies you have the same thing with double entry bookkeeping, that every debit must have a corresponding credit in some other ledger so that everything balances to zero. And then finally, the triple entry part is when Bitcoins are transferred from one wallet to another, and that's the advance in accounting that I was talking about in the previous video, namely that when a company transfers an asset to another company and receives a credit in return, for example a payment, if you are using a blockchain-based accounting system, then those two transactions can actually be linked. And the advantage of using a blockchain is that companies don't want to open up their books to other companies, for example competitors. However, there are some pieces of information that just simply need to be shared in order to enable this kind of accounting. And there the trust building, or rather the trustless nature of blockchain, means that the relevant information can be shared between relevant parties. And I think there's also the opportunity for using things like zero knowledge proofs in order to allow companies to share the relevant accounting information between each other without revealing all their trade secrets and all their financials that they wouldn't want their competitors to get their hands on. So there you have it in a nutshell. Triple entry accounting using a blockchain, and in particular using the features of blockchain that allow for transparency and privacy at the same time. Hope you found that interesting. See you in the next video soon. Bye for now.